Sol or ETH, which is the best investment for this bull cycle? That's exactly what we're going to talk about today. GM, welcome to the Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. We are here to make sense of an on-chain world in constant transformation. I'm Kyle Reedhead, your host for today's episode, and I believe that ETH and Sol are going to change the world together. In today's episode, I'm going to start by explaining the fundamentals between Ethereum and Solana and give us an unbiased take on which is the better investment and also which is the better technology for this cycle and beyond. We'll talk about the pros and the cons of Ethereum and Solana in terms of the technology and adoption. Then we'll also turn to market analysis, breaking down comparisons between the two, price analysis, as well as short-term catalysts for both ecosystems. One of the big issues in the Ethereum Solana world in debate right now is there's so much biases because people are either ETH maxis or Sol maxis. And so the ETH maxis will tell you Solana's terrible and vice versa. Today, I like both. I'm going to make sure to give an unbiased opinion on the technologies and the price movements and the price action and the potential of both of these assets. If that's what you want to hear, then do me a favor and subscribe or follow on Web3 Academy on the platform that you are listening on. If it's YouTube, if it's Spotify, it's Apple Podcasts, make sure you follow, subscribe, and also hit a like button, hit some comments. If you're on YouTube, if you're on Spotify or Apple Podcasts, give us a rating. Help us to grow this podcast and get us more reach. All of that relies on you guys to engage, follow, subscribe, and like. And if you do those things, it really helps us grow. So thanks for that. We appreciate your help. Okay, guys, let's dive into two of the biggest and most important tokens in our industry today, and probably two of the most important throughout this cycle. There's so much happening between the two of these. And so we're going to dive into that. Before we do, let's take a quick second to hear from our sponsors.
Modern newsletters are built on Paragraph. That's right. Paragraph is a brand new newsletter platform that combines the best parts of Web 2 and Web 3 to supercharge newsletters for both writers and readers. Build a community, not just an audience. Paragraph uses blockchain tech to allow readers to collect and own the words that matter to them. This takes reading a newsletter to the next level. With Paragraph, readers can mint, collect, and show off quotes from their favorite newsletters. This opens new possibilities like creators sharing revenue with fans. I also love their new feature, Paragraph AI. This integrates GPT-4 natively in Paragraph to create, edit, and improve your writing effortlessly with one click. And guess what? We at Web3 Academy are on board and have already moved our content over to Paragraph. We believe this is the future of newsletters because of the profound engagement it creates between creators and fans. So, whether you're a creator, writer, or an avid reader, it's time to check out Paragraph and capitalize on the opportunity of being early.
All right, welcome back, everyone. Up on the screen here, I have the Sol versus ETH charts. We can see that during the bear market, 2022, and even parts of 2023, Ethereum really dominated Solana as the Solana just sort of bled out. I mean, they both went down, but Solana went down a lot more than Ethereum. And this year, obviously, Solana's had just a breakout year and has just been crushing basically every other asset in this entire space. I mean, if we look at the totals for Solana on the yearly, so year to date, it's up 575%, which is just unbelievable and unheard of. Whereas Ethereum is up 82.74%. So just a massive difference and such a clear win for Solana. A lot of that's to do with Solana catching up from its near-death experience of FTX. We'll talk about that. But the question is, moving forward, which is the better investment? And that's what we're going to uncover here today. So let's start off with some fundamentals. And we'll start first with the fundamentals of Ethereum. So the key thing to understand here, and then we'll get into fundamentals of Solana. Fundamentals of Ethereum. So Ethereum has been around since 2015, okay? This thing has been here for a while. It's been through multiple bear markets, multiple bull markets, almost 8 years now. And what that does is it gives it Lindy. And Lindy is basically, as something develops network effects, meaning other people use it, other people rely on it, whether it's for their businesses or for just interactions they do during the day, that it's hard for something to be killed. It's hard for network-based technologies to be killed off, right? Ethereum has strong Lindy and a strong network effects. There are a lot of businesses, whether it be L2s, applications, hedge funds, investment firms, exchanges, even banks that build on top of Ethereum, brands that are building on top of Ethereum. All these companies and organizations and people rely on Ethereum to succeed. And that gives it really strong Lindy, something that you can be sure is going to continue to grow over time when you have something like that. In addition to having strong Lindy, which only Bitcoin and Ethereum really have that in the crypto space, in addition to that, Ethereum has sustainable tokenomics, which really most other tokens do not have. And what that means is Ethereum generates enough fees in its gas fees, call that revenue, to pay for its security. Its security is paying validators to secure its network. If you don't have fees paying for that, you need to subsidize it by inflating your currency. Now, Ethereum does have inflation, a small amount, but it makes up for it because it makes enough in fees that it burns half of it, and it burns more than it's actually inflating. So Ethereum is not only profitable, but it's also a deflationary asset, something that most other assets in the space just don't have. Soon, in the coming months, it's likely that ETH will get a spot ETF approved in the US, somewhere looking at around May 2024-ish. If that happens, which we don't know for sure, but if it does, it really legitimizes the asset to be more than just this like casino toy. And it means that institutions will really be able to invest in this and build on top of it. So that's a really big deal. And then finally, and this is the confusing part for a lot of people that I'm going to discuss a lot in the fundamental side, which is I believe that Ethereum has found product market fit as a settlement layer for layer twos. And so Ethereum and Solana are actually not competing anymore, in my opinion, because Ethereum is a very different thing. It is a settlement layer for the internet, whereas Solana is an execution layer for the internet. Now, it does do settlement as well, but I think these two are competing for different things. And so I'll talk about that in just a second. So that's the fundamentals of Ethereum. Let's move into the fundamentals of Solana. So Solana's been around since about 2020. It's when its token launched anyway. And it obviously had its near-death experience just at the end of 2022 with FTX collapsing, which was a big investor, a big builder on top of Solana, but it's bounced back. And that's big for, again, Lindy and network effects to show that it is resilient. It's another big thing for Solana is its tech is separating itself from the rest. Most of the alt L1s, which is a term you'll hear a lot in this space, I don't really like that anymore, but alternative L1s to Ethereum, they're called that because they were literally just copies of Ethereum. So the EOS and the Avalanche and the even like Cardano and many BNB, all these are just basically a copy of the Ethereum code, and then they change some things to make it more scalable. And Solana is not that. Solana is a whole different language. It's completely redesigned the way that blockchains work. It's a completely different architecture, and that is something that I think is really bullish for its tech. In terms of product market fit, most blockchains don't have this. Solana, however, I think is finding it right now, and it's finding it through use cases that just can't exist on other blockchains. And so DPIN is one of these, where you have something like a Helium, which is creating cell networks by combining hotspots from people all around the world. This is a big deal. There's a lot of transactions needed to make this work, and you just can't really do this on anything other than Solana. You have compression NFTs through, it's called Drip protocol, and these things just can't happen on other chains because they're so cheap on Solana. And so it's finding product market fit in these use cases that just aren't possible elsewhere. And then finally, its tech, although it's already separating itself, it's actually improving by orders of magnitude. FireDancer, which is creating another validator client for Solana, should be live summer 2024-ish, is pushing the limits of Solana and potentially or theoretically pushing the transactions per second of Solana to 1.2 million, which would just be unheard of. It would make it faster than most databases. It'd be pretty incredible. And again, there's just no other blockchains even remotely close to these sort of speeds. So it's really, in the fundamentals, it's really separating itself. So those are the two big, Ethereum and Solana. These are the fundamental drivers for the two and why they're both very important and bullish assets for this cycle. Now, let's dive into the potential or proposed problems of both Ethereum and Solana. And I will do a little bit of FUD control on these to help people really wrap their heads around what's truly happening here. The proposed problems, I think, of Ethereum and Solana are narratives that I think are being built by the opposing ecosystem. And so again, Maxis will double down on these, whereas I'm going to try to peel back the layers and help you understand what's truly going on here. So the first is that Ethereum fees are too expensive. And if you use the layer one, the Ethereum L1, then of course, yes, they are. $20, $30, $40, $50 to transact makes no sense on blockchain. And that's what they currently are on Ethereum, and they will probably always be. But the reason why this FUD or this problem doesn't make any sense is Ethereum L1 is not meant for humans to transact. And so we aren't meant to do things on there. Apps are not meant to be on there. The reason that humans are on there and apps are on there now is because L2s just came along, less than 2 years ago. And so we are moving everything. We are bridging everything over to the L2s. Just some people haven't done that yet. And then also institutions, whales, people with millions and millions of dollars that don't need cheap fees, that just want decentralization to the max. They want max security for their assets. They'll use Ethereum L1 and they'll pay $20 fees and they don't care. But all of us who are here airdrop farming and trying to make our first bit of money, it doesn't make sense for us, but that's not what the Ethereum L1 is for. And so the fees are expensive. They're going to stay expensive. And that's the purpose of Ethereum, because that's what helps it have its economic security. What we are meant to do is use the L2s. That's the whole roadmap and idea of Ethereum. And I think people just haven't wrapped their heads around that. So fees are meant to be expensive on Ethereum. It's the L2s that you use where they aren't expensive. And so that brings me to my next problem on Ethereum, which is people are saying that layer 2s fragment liquidity, they break composability, and bridging is a big problem. And so currently, yeah, it's sort of an issue. There are 50 to 100 L2s right now. Most people have assets on one or the other. You got to bridge from one to the other. The bridging is not great. I'm first to say this. I say it all the time. But DC Investor, who's been around this space for a long time, his tweet here that I have up on the screen just says, I think many of you have incorrectly faded Ethereum L2s and what they will eventually mean for Ethereum and for ETH, because you believe how you use this tech today is how most people use it tomorrow. But in my opinion, it mostly won't be people transacting on L1s at all. We got to understand that one, bridging will get abstracted away. It won't ever be an issue. It just is right now. It's almost fixed, but we're still working on it. But eventually you'll just move from L2 to L2 and you won't even have to think about it. It just will be abstracted away. You actually won't even know you're moving from L2 to L2. You'll just go to buy something in one app because you'll use the app itself, and your liquidity underneath will just move underneath for you. You won't have to do anything. You won't have to think about that. You won't have a wallet where you're looking at what's on Optimism, what's at Arbitrum. It'll just all happen for you. It'll just completely be abstracted away. And we're even close to that now. And then that means liquidity won't be an issue and it won't be fragmented. And same with composability. Composability is not even a problem right now. For example, we have an on-chain gift shop where you can earn certain things depending on things that you mint. And right now, whether you mint them on Base, Polygon, Arbitrum, whatever, it all works in the same UX. You don't have to move things around. It can read what's on what chain. So it's quite simple, actually. And I don't think it's as broken as what people think. I'll talk more about L2s in just a second. But the way that we use blockchain now is not how we're going to use it in the future. We won't actually be interacting with the chain like we do today. Most people, we won't be airdrop farming and doing all these things and trying to move liquidity from one app to another. And it just, all that stuff will just happen for us. And so I don't think that how we use today is a good indicator of what will happen 1, 2, 3 years from now. So that's a really important one. Next, it's too confusing with so many L2s. So a lot of Solana people will say there's too many L2s. And so it's confusing for developers. And so they'll just go to Solana instead because there's just one Solana. This is a complete false narrative that Solana people will make up, because the fact that there are many L2s makes it even harder for people to then decide to go to Solana, because people aren't looking and going, okay, do I build on an L2 or do I build on Solana? They're going, do I build on Solana? Do I build on Arbitrum? Do I build on Optimism? Do I build on Polygon? Which they're all just execution layers. There's no like, I'm going to either go in the L2 ecosystem or I'm going to go on Solana. And so if I go in the L2 ecosystem, I have to then decide between 50 of them. It's just, which chain do I want to build on? And that is going to be 50 to, however many options there are to build on, right? And so if 99% of those options are L2s on top of Ethereum, that's very bullish Ethereum, because no matter what Ethereum wins, doesn't mean every L2 wins, but it's not like it's like either L2s or Solana. It's one of the many execution layers. And this is why I say I don't think Ethereum is competing with Solana so much anymore. It's Solana competing with L2s. And so I just think that's a very false narrative. Again, I don't think people are deciding between which L2 because they only want an L2. It's just which execution layer is best. And that could be immutable, it could be Optimism, could be Solana, whatever. So I think it's a false narrative. And I think the more L2s, it actually becomes even probably more difficult for Solana because there's just too many options outside of Solana. The other one is that Sol's tech is better. Solana's tech is better. And so why would anyone build on Ethereum now? If it's better, if it's faster, it's cheaper, why would anyone build on Ethereum? And what people are understanding is that fast and cheap isn't the only thing that matters. There are other features that matter when you're building on a platform. That could be decentralization, that could be functionalities, that could be different features, that could be stuff like KYC, could be many different things, right? And so we looked just this past week, and Flipkart, which is, they have 350 million users. They're basically the Amazon of India in terms of like an e-commerce platform. They are launching a on-chain. And what are they doing? They're launching L2. Now, look, they know Solana's faster, Solana's cheaper, but they want to build their own ecosystem on chain, not an app, but an ecosystem, which means they probably want others to build on top, and they want to generate revenue if others build on top of their ecosystem. They want to control the UX. They want to control more things. And so building on an L2 for them makes sense. If they build on Solana, they don't get to control any of that. Solana controls that, right? Now, and so I think we're going to see more platform-like businesses use L2s rather than building on a chain, than an L1, because they have more functionality. So your Amazons, your Apples, et cetera, they're going to have an L2 or their own chain, but probably an L2 rather than building on an existing L1, okay? Even if you want just like a reason to show, hey, this is actually true and it's working, Coinbase just today launched another L2. Now, this is one for institutions, so it needs different functionality than what Base offers. It's probably going to have some KYC stuff and whatever else. But regardless, it didn't launch as in Solana just because it's fast and cheap. It launched as another L2 because they know they can make revenues from it and they have more control over it. So I think a lot of people are just missing the idea of what L2s really are, which again, L2s are becoming very easy, very cheap to create and to launch. And it gives you functionality in your own chain without having to worry about figuring out security and a token and all that stuff. And so it's a game changer. And I think L2s, there's going to be many, many, many of them. Again, the bridging will get abstracted away. But more than that, most people just won't even move from one chain to another. They'll just use an app, not a chain. They'll think that they're using an app, just like we use Spotify today. They might just go and use Sound, which is on Optimism, and just like they might purchase some stuff with their credit card or with crypto in there, and it just stays there. They don't need to worry about bridging. And then they'll go elsewhere and they'll, again, purchase with their credit card over on another one. And that's how the internet currently works today too. So there's the ability to bridge, but I just don't think many people are going to use it or need to use it. So we got to stop thinking about how we use it today. It's going to be much more easier to take money from anywhere and put it into any app in the future. So those are the fundamental proposed problems on Ethereum that I just think most of those are just completely untrue. Let's flip over to Solana and look at the proposed problems over there. If you have listened to an Ethereum maxi, maybe even a Bitcoin maxi, they say that Solana's chain shuts down frequently. This is just completely false. It was true last year, and more even year before that. It did shut down a couple times. They've been working to figure that out. The tech has improved. Again, it launched in 2020, and so of course it's going to have some issues in terms of the technology in its first couple of years. Ethereum and Bitcoin both also had issues, and so to say that it's a shitty chain because it had issues just makes no sense. But you can look on this site here, and Solana has not had any downtime since, I think it's February maybe. Yeah, February of 2023. So we're almost a year with absolutely no downtime, no issues at all with the chain, which is quite impressive. And I think we'll continue to see that stay with 100% uptime moving forward. They have fixed those problems. So I don't think this is still an issue like most people would say. Solana is not decentralized. That's another one that people will say. And look, the validator numbers of Solana are lower and the requirements to run a validator are higher in terms of costs. But the thing that Solana is betting on that I think people are missing is Moore's Law, which is basically that hardware becomes more performant, so faster. And I think it's something like every 2 years it doubles, which also means it then becomes cheaper to have the previous amount of GPUs or CPUs or whatever speeds that you need every 2 years. And so I think over time, the hardware requirements for Solana will go down in terms of price, and it'll also become more efficient at the same time. And so I think decentralization is not, even now, is not really an issue for Solana. And I think it has a path to get even better and better over time. Again, I just think this is people who are too far gone on the Bitcoin maxi side where everything has to be 100%, secure and decentralized. I don't think that's necessary for everything. And so I think that's not an issue for Solana. It's just something that people continue to sit on because, in 2021, it was very centralized. It's been fixed and is continuing to be fixed on an ongoing basis. Okay, the last one, and this one still is definitely an issue for Solana, which is that the tokenomics of Solana are not sustainable. Currently, this one is true, but I do see sort of a path for Solana to fix this, which is Solana's inflation rate right now is about 7%, and then it doesn't make a lot of revenue from its fees. I can pull this up here. Currently, Solana is bringing in about $163,000 per day in its fee revenue. The problem is that because its inflation is 7%, and that's what it's paying out its validators to run the network, its expenses are over $10 million a day, right? So if there's a massive hole here, if we look at earnings, I mean, they are what are we at here? $12 million to, let's see, what are we at? 11 million. Like, we're on a weekly basis, they're losing a lot of money in terms of its tokenomics. Okay. It's in the hole every single day by millions of dollars, which is obviously a really big problem because it's essentially inflating its currency even worse than something like the US dollar. And so is there a future for that? The thing that I would say is, one, its inflation schedule is programmed to go down over time. And by 2030, it should reach about 1%. So that really significantly reduces the expenses. Now, it doesn't mean it's going to happen exactly by 2030, but that's their proposed decrease in its inflation. By the way, Ethereum, Bitcoin all had the same thing. They all had higher inflation in the beginning, and that will go down over time. This is normal for any company, like any startup. They get funding, right? They had subsidized the costs of whatever it is, user acquisition, et cetera, in the early stages until it can generate enough revenue. And so Solana basically needs to 25 to 50x its revenues. So the question is, can it get 25 to 50x more transactions? And I think it can. I don't see why not. Like, it's still very, very early days in Solana, and it's very, very early days in Web3. And so I can see this continuing to go up and up and up. Now, remember, these numbers are, that doesn't work, but these numbers are going up because the price of Sol went up, not necessarily because there's more transactions, but over time there will be. And so I think that they will find a balance at some point, but we could be years away from that. So is that a problem? Sure, it's a problem for now. But again, we don't yet know how much sustainable tokenomics is even going to matter in these sort of ecosystems. It's something just very different than we're used to. By the way, if we compare that to Ethereum is very profitable in its tokenomic structure, in upwards of millions of dollars a day. That is profitable. So it's a very big difference. So let's go into the catalysts for ETH and Solana. Now that we understand the fundamentals, I think they're both very strong. They're both improving. Doesn't have a lot of big problems like people think or are saying. I think both of them are very strong ecosystems, very strong technologies. And so when we look at prices, let's talk about what those catalysts are for prices in the near future. I already talked about the prices of ETH and Sol and where they're at this year. But here's what I think is going to happen over the next little while. For Ethereum specifically, we have the Ethereum ETF, which is likely going to launch in May. That opens the doors and the floodgates for Ethereum to get a lot more investment, have a lot more demand when you have an ETF where institutions and hedge funds and pension funds can all begin to invest. So I think that's a really big deal. The next thing I would say is continued adoption of L2s. And, we can look at this here. We just hit this last month an all-time high in users on L2s. We have multiple L2s launching every single week, basically. L2s in terms of total value locked are over almost $16 billion. So the liquidity is moving there. I think there's just so much happening on L2s. And the reason why this is bullish for Ethereum is L2s all pay to settle their transactions on top of Ethereum, meaning they have to buy Ethereum and they have to spend their Ethereum, which then gets burnt and paid out to validators. And so they are the ones generating the revenue to Ethereum. It's technologies that are paying Ethereum, not humans. And that is a very big deal. These things are just automated. It just happens, right? And so this is a really big deal. And then not to mention almost all the L2s on Ethereum use ETH as their native currency. So they use it to pay fees. So the users use it to pay fees. They price their NFTs and their digital goods in Ethereum. ETH is used as collateral in most of the DeFi protocols. And so ETH is basically money on the Ethereum ecosystem, but also on every single L2 that exists. No other chain has that. And so I think that's a really big deal. Another catalyst is ETH is a hard asset. And by the way, I think adoption of L2s picks up big time in this next year. And so I think we'll continue to see that adoption. I think that's huge and a big catalyst. Another big catalyst is that ETH is a hard asset. And I say it's a hard asset because it's deflationary. I could actually pull this up if we wanted to see how deflationary it is. If we go to ultra.sound money, we can just see here that in the last 7 days, it's minus its total supply by 0.6%, which is a pretty big deal. And so ultimately, though, because it is a hard asset, when interest rates go down and liquidity goes up, hard assets tend to do really well. Things like gold, Bitcoin obviously has done really well. The crypto space in general does really well, but ultimately hard assets will do the best, especially for institutions. ETH is now one of those plays that also has a yield. I think that's a really big deal for this coming cycle that a lot of people are just underestimating. And speaking of liquidity, just look at this chart here. I'm doing a report right now on how liquidity impacts liquidity impacts crypto. And it'll be one of the pro reports that come out in the next few weeks. If you are not a pro member, you can sign up below. This is our newsletter where we do premium research on anything on chain. But anyway, here's a chart of FedNet liquidity. So this is the US-based liquidity and Ethereum's price. It's almost identical, okay? And that's again because it's a hard asset that has Lindy, et cetera. And so as interest rates go down, which I think they will in 2024, liquidity goes up, Ethereum is going to rocket along with liquidity. Okay, a few other things for catalysts for ETH. I think over the last few years, Ethereum has had billions of dollars invested into its ecosystem, whether that be layer 2s, apps, et cetera. And the one thing you got to understand is that one, that means a lot of new technology and applications are all about to launch in this coming year. There's a lot of money invested in 2021, in 2020, and even 2022. And so it takes a few years for those things to launch. I think 2024 will be a big year for these things to launch. And then it's just, there's a lot of funds that have a lot of money in Ethereum. They're not going to just let this all just fall apart, right? They're not going to let the L2 roadmap just not work. They have so much money already invested. They're going to continue to invest to ensure that this stuff works out. This is part of the Lindy and the network effects thing I talk about, is you got to understand how much capital is relying on Ethereum ecosystem to work. They're not just going to let this stuff fall apart. I think a lot of people just don't really realize that. And so that's a really big deal. They'll start to invest in more companies. They'll pay people to build on their apps if they have to. They will incentivize through tokenomics. Like, they'll do whatever they have to do. And then Ethereum is just this very broad piece of technology. And there's so many different things that could work out that would enable Ethereum to do well. If the L2 ecosystem works, of course, that means it's good. But even if just gaming works, well, you have Immutable and Polygon as the two leaders of gaming in crypto. And so there's two L2s that will do really well on top of Ethereum. If DeFi works, you have Arbitrum and Optimism that are the leaders there. If real world assets work, Ethereum is the leader in that. If stablecoins end up being the thing that works, Ethereum plus L2s are big there. If zero knowledge proofs works, well, most of them are going to want to settle on Ethereum. Like, there's so many things where not everything has to work. Just one, two, whatever works, and Ethereum works. And I think, again, this is just why it's so important to hold on to ETH, because it's a bet on the entire crypto ecosystem. So a lot of catalysts coming our way for Ethereum. I'll talk about numbers of what this might look like in a second, but there's just so much going on with Ethereum, and you really can't be fading it right now. Let's move to Solana. Solana's had a big catalyst already, right? It survived the bear market. I think that was its big catalyst. It's still around. And so it's had a massive run up this year. But what's next? I think the big thing right now for Solana is airdrops. This was something that happened in 2020 for Ethereum. It was a big catalyst to the Ethereum ecosystem. It drives a lot of liquidity. If you think of Jito, for example, which is the Lido of Solana, where you can, stake your ETH and have a LSD, the token for it, Jito Sol, and it just had an airdrop. And it's currently worth, I think, close to $2 billion, maybe a little bit above $2 billion. And so basically, the Solana ecosystem just printed $2 billion of liquidity. Now, only about 150 million or 200 million made that into the hands of users. But what did a lot of people do? They sold those tokens and they bought NFTs, they bought Sol with it, et cetera. It's liquidity into the ecosystem. We've now had Jito, which has done this. We've had Pyth, which is, I think, brought about 600 million into the ecosystem. Jupiter, which is their big exchange, is going to launch any week now. And that's going to bring hundreds of millions again, potentially billions. And there's probably 10 to 20 other applications that are about to launch tokens in the coming weeks to months. And so we're talking billions of dollars coming in the Solana ecosystem, and a lot of it going right in the hands of users and then also developers. And so this is a massive, massive stimulus package to the entire ecosystem. And so this is bullish for Solana and for the token itself, and then just bullish for the entire ecosystem. The one thing you understand is right now, everyone is airdrop farming. People have come from all the other ecosystems, L2s, Ethereum, Avalanche, whatever, over to Solana just in the past couple of weeks. You should see the metrics of Solana. It's going nuts. And the thing is that people aren't selling it, because what is everyone doing? They're buying Solana, they're putting it into Jito Sol, and then they're giving liquidity to MarginFi and Marinade and Camino and all these other lending protocols, because they're trying to farm airdrops, which means everyone is buying Sol and Jito Sol and these Sol-like products and then staking them. No one's selling them until these airdrops come in. So it's a lot of demand, buying pressure on Solana and its tokens. And then not to mention, we're in a early stages of a bull market. So there's a lot of new people coming in too. There's just not a lot of sell pressure in this ecosystem. And I think that's just a huge catalyst for Sol. And then finally, I think the other big catalyst is new apps launching on the Solana ecosystem. So ones that just can't go anywhere else. Over the last year, you've seen a few applications merge over from different chains or their own chains over to Solana. And I think we'll continue to see that trend, and that can definitely drive more adoption and more liquidity over to the Solana ecosystem. So those are some very important just catalysts, both in Ethereum and Solana. Let's finish this episode off with just a bit of kind of looking at the charts and looking at the prices and some of the market cap stuff here. First thing, let's start with Ethereum. We've been tracking this for a while now. I've in the last week's episode of Market Watch, I shared these charts. Ethereum has lagged, of course, but it recently kind of jumped out of this downward channel and jumped out of that to about 2K, which we sort of called and talked about. And then we said once it passes 2140, that's some strong resistance, it should shoot up. And it did. It went from 2140 up to almost 2400. Now we've had a pullback in the entire crypto market just recently. And what's great is the dip went back down exactly to 2140 and it's since bounced from there. And so I think that's extremely bullish. Maybe we go back down, but if the industry continues to move forward, which I think it probably will, but again, we don't know. If it does, that's a super bullish chart pattern for it to bounce off, turn resistance, old resistance into support. And then we're kind of free falling or free sailing until about 3,000. So I think we should see a nice close to the end of the year, early 2024 for ETH. And I think we should see ETH finally begin to catch up. But let's see. But I'm pretty bullish on where ETH goes in the short term. Solana has just basically been up only. It also had a pullback. I think its main resistance really is around just over $80. So I think we'll reach up to that $80. Who knows? Like I said, there's some strong catalyst to Solana right now. So it could just break the resistance and not even have an issue there. There's not a lot of technical analysis because it just hasn't been around that long. But $80 is kind of what I'm looking at. After that, I think it could slow down and chill. But honestly, who knows at this point? This thing could just continue to go. Let's see if we have another big dip in the markets or not. If we don't, I think Solana probably just rips right through this thing because, again, there's just so much demand for this thing right now. So we'll see where that goes. In terms of the entire cycle, I think if we're looking at where things go, it's nice to look at market cap, not necessarily price. Ethereum last cycle went up to about 571 billion. I think it goes more than $1 trillion this cycle, and it becomes established as the settlement layer of the internet. Again, Ethereum's goal is not to compete with Solana. It's competing to get technologies to settle on top of it, which I think in the next year, we're going to have multiple big companies launch L2s on top of Ethereum. And so Ethereum becomes this sort of like an Android-like service where companies will build platforms on top of it and ecosystems on top of it. You have Google, Samsung, et cetera, building on top of Android. That's what I see as Ethereum. And so I think Ethereum, because of its product market fit and its sustainable tokenomics, goes well over $1 trillion. I think it's going to go probably more than that. The thing I think that's huge with Ethereum is the burn. As we get into a bull market, we're going to burn so much ETH and there's going to be so much demand for it because it's just sustainable. It's got product market fit. Funds, like big institutions, they don't typically go down too far on the risk curve. So they're going to buy something like Ethereum because they also want the yield. You can get 4% yield if you hold the ETH token. And so if you just have everyone wanting the yield and buying this thing, people using it as collateral in DeFi, and then you're just burning a ton of it, this thing just is going to go nuts, I think, in the bull market. And I think it's going to reach numbers that are just unheard of. So I'm extremely bullish on Ethereum moving into this bull cycle. Solana reached about 80 billion in market cap last cycle. And I think that because it's much smaller than Ethereum in terms of market cap, it can move much easier, much faster. I think Solana probably outperforms ETH this cycle, and Solana probably goes somewhere close to what Ethereum did last cycle. Again, Ethereum and Solana are very different technologies now. Ethereum settlement layer, Solana an execution layer. And so I think in terms of price, there should be different projections for where they go in the future. But if we look at Ethereum, which last cycle, it was just an execution layer. It wasn't a good one by any means, but it was the only real legitimate one back in that cycle, and it made it up over 500 billion. And so I don't see why Solana can't do something somewhat similar to that. I don't know that Solana gets that big this cycle, but I do see it following in ETH's tracks because Solana is what Ethereum was last cycle, except better, right? And so can it get up that high? Let's see. I'm not sure. Again, Solana just doesn't have the money factor. It doesn't have the sustainable tokenomics and the deflationary aspect of it. So it doesn't get the monetary premium that Ethereum does, which could really matter. That's the only thing I'm unsure of about Solana and why I don't think it probably doesn't go as high as Ethereum did last cycle. Ethereum has monetary premium, so it's a bit different. So anyway, let me wrap up this whole thing by saying this. Ethereum and Solana are both extremely important technologies and assets in this ecosystem, in the crypto industry. And I think they should both be large parts of your portfolio. I think you should have a bunch of ETH, which is my largest holding. I think you should also have a decent amount of Solana. I wouldn't weigh it the same because, again, Ethereum is just a lot less risky and farther along in its journey, but depends on your risk and your portfolio, etc. But again, I think you should hold both. My assumption is Solana probably outperforms. Although if we do have another proper cycle where we have another bear market, I would say Ethereum significantly outperforms Solana during that bear market. So it's all about time horizon. It's all about, do you plan to sell, not sell? What are you doing in that regard? And so I don't want to say which one you should buy, which percent you should hold, when you should sell, etc. But these are all just things that you should keep an eye on and understand as you build out your portfolio. But ultimately, you should have both. And I think short term, probably Solana continues to outperform. Long term, it's anyone's guess. We don't know yet. We still don't know exactly how this whole crypto world's going to play out. But I think there's a world where both Solana and Ethereum do extremely, extremely well and become very large cap, important assets in this space and just in the overall financial world. So anyway, hopefully that gives you guys a good just deep dive into both ecosystems and ideally can get rid of a lot of the FUD and just the noise that you hear on Twitter and on other podcasts. This is an unbiased take of both ecosystems and both tokens. And I hope that this helps you guys with your investment strategy and your portfolio makeup for this cycle. Again, please, if you like this content, subscribe and follow us on any platform. If you have questions, comment below. If you're on YouTube or Spotify, you can comment and ask any questions, and I'm happy to answer in our next episode. And otherwise, make sure you like. I'll see you guys in the next episode. Thank you so much. Have a great day. Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.